So I want to welcome everyone to today's edition of Financial Immunity Community. And like Julia earlier said, today we are treating understanding insurance. And this is going to be a practical session to help everyone to understand every single item about insurance. The good thing about financial literacy and our webinars is that we make and demystify anything financial services, either it is under banking, pensions, insurance, or investments. And today is not going to be an exception. If you have missed any of our sessions, we've already treated stock market trading, and we've equally done understanding mutual funds. Today, we are going to be doing understanding insurance. There are a number of topics we are going to be doing all across the 4 different pillars of financial services. And we are going to be touching on everything that you've got to understand in order to become financially well. Now, today, because we are treating insurance, we will be introducing to you one of the partners we have, and that is Enterprise Group Limited. Particularly, we have Enterprise Life and Enterprise General or Enterprise Insurance. So without much ado, I want to welcome the rep for Enterprise Life, who will be presenting to us any moment from now. His name is Mr. Osmanu Tankari. Mr. Osmanu, if you are here, kindly unmute yourself and let's hear you. Thank you. Okay, if Mr. Osmanu is challenged, let's move to our next partner. Our next partner is Axis. So Axis has recently launched an insurance-backed pensions product. And so they would equally be a good partner to introduce, as they also talk to us about that before we get into the very details of what we are going to study today. So Mimi, if you are on, kindly pick up and let's hear from you. Thank you. Okay, it looks like they are challenged. Let's see. The technical team should help Osman. Just a second. You can just unmute yourself, and it will allow you to unmute yourself. You can unmute yourself. Mimi, you can unmute yourself.
Hello.
Great, we can hear you.
Okay, I was struggling with that. Hello, everybody. Hello, Doc. Thanks for the opportunity to speak to you today about what Axis has to offer. Axis is a private pension trustee, one of the leading private pension trustees in Ghana. And we are the only trustee that has, a pension package with a free insurance cover. The purpose of this is, as we save towards our retirement, sometimes the unknown happens that may cause financial stress for ourselves or our family members. So by signing up onto the Axis Pension Trust plan, or any of our products, whether it's Tier 2 or a provident fund or our personal pension product, you get an insurance, a free insurance cover of 5,000 as death benefits or medical, if you are also medically incapacitated. So apart from saving for your retirement, which we always encourage you to, should anything happen, you have a free 5,000 Ghana cedis insurance cover. If you think you want more cover, you can speak to us and we'll also be able to help you to go about that. So basically, all our products, all our master trust products, once you sign on, you have access to a 5,000 Ghana cedis death benefit or medical incapacitation cover. So I encourage all of you to sign up. The minimum amount you can start with is 100 Ghana cedis. That's for the personal pension. We also have a product for the informal sector, which allows you to contribute 10 Ghana cedis weekly or 50 Ghana cedis a month. Now, these monies are invested for you, and compound interest will definitely be doing a good work with your money. If you've been following what Doc has been preaching so far, you see the effect of compound interest working for you over the long term. As you work, should anything happen, Access will also be ready to support. There are also various platforms that we have that allow you to have all the transparency you need when it comes to, managing your pension funds. We have a mobile app, we have a client portal, we have a WhatsApp bot, and all that is to enable you have as much information as possible to make your journey towards a comfortable retirement very, very comfortable. Thank you so much, Doc. Thank you, everyone.
Thank you, Mimi. So just briefly, can you give us one hotline that anybody who would want to pick up your product right now, even before we get into the time when you share some other numbers?
Okay, sure. Thank you. I was having the same issue again. When it comes to retirement in Ghana, the situation is quite terrible. In 2019, just about 78% or about 78% of pensioners were receiving 1,000 Ghana cedis and below. So we all have to save towards our retirement. If your salary is not enough for you now, then definitely you would know that your pension would not be enough for you. So I encourage you to all save towards your retirement, and definitely do it with Access, because we're also thinking about, your future. Should anything happen, there's a free life insurance cover in there. Thanks.
Right. So what number should we call if we want to call your office?
So you can call 0302 738 555. 0302 738 555. Or you can also email us at APTL. Let me put it there. APTL@accesspension.com.
APTL@accesspensions.com.
Yes, please. You can also. I've dropped it in the chat box, so
great,
so that you can up from there.
All right. So quickly, I'm going to invite our partner enterprise and the rep, the manager who is going to be doing this also very briefly is Mr. Osman Utankari. Mr. Osman Utankari, you're welcome. Kindly let's hear you.
Thank you very much, Doc. I'm not presenting any slides, so I'm presenting my face.
Go ahead.
Good. Sorry for the earlier challenge. Like I said, my name is Osman Utankari. The topic that we're discussing, if I heard the moderator well, we are to demystify it to the level of the layman. So allow me some few seconds to do some introduction in terms of insurance. Clearly, insurance is a branch from that big tree called risk management. Indeed, if I decide that I am traveling to Kumasi, there are a lot of things that might happen on the way that may not allow me to reach Kumasi. What are some of the things that I can do to avoid those things? However, when it comes to life insurance, the difference between life insurance and insurance general business is simple. With insurance, regards to general business, it is about if. But when it comes to life insurance, it's about when. That is why technically in life insurance, they rather term it as life assurance. If you go to UK, it's rather term assurance more than insurance. So when you are talking about general business, you are talking about if it happens. And so there might be a probability, the possibility that it would not happen. But when it comes to life assurance, it is certainly going to happen. You cannot stop it. What you don't know is when it is going to happen. But when it happens, what is going to be the financial burden that you want to carry? It looks like somebody saying you cannot hear anything. Please, can I be heard? Hello.
Yes, you can be heard. Please go ahead.
Okay, all right, that's fine. I just saw a pop-up, somebody having challenges. Right. So in life insurance, like I said, it's about when it's going to happen. It's about death. Whether I go up or down, I am going to die. What is going to happen is that my family members, whether I like it or not, I will be bereaved. I will be bereaved. But then, so in that case, I am not going to prevent that death from happening. However, when it happens, what is the financial burden that I'm going to carry? What am I going to be exposed to? Is this something I can manage from my end? For example, if I sit here and I am told my mother-in-law has just passed on, what happens to me now? This is a situation where one, I do not even have power to even fix the funeral. I am a son-in-law. I do not even have power to fix the funeral date. I do not have power to even fix how it's going to happen. All I'm here is that my wife will tell me this is the cost. So it's the same way to if my parents die. That is why in Enterprise Life, we have a product called a Funeral Finance Plan Unlimited. Unlimited here is that in those days, we do have policies that have a cap on age. In other words, if somebody is my father or my father-in-law is more than 74 years, I will not be able to insure the person. But experience has shown that those who are rather 80 plus or even 90 plus, these are people whose funeral rather have a lot of cost because theirs is a celebration of life. So that the FFP Unlimited had been introduced, and it takes up all limits when it comes to the ages. And so we have a policy that one could cover his father, mother, guardian, any member of the family whose death is going to expose you to financial challenges. You can come and cover by the age that the person have. You'll be able to do it. Then just throw in something, because sometimes we would think, oh, I have the money. By the time that the death will come, it's unlike wedding or adoring. Wedding, you plan yourself. When it comes to naming some, at least you have a 9 months notice. But when it comes to death, it is not like that. So you need to put in something down at the time that the event will happen. Sometimes your money has been locked up somewhere in some business and becomes a problem for you. So when you put this thing down, you have that peace of mind that should something happen, you are not going to talk about taking a load. You are not doing the plan that you have for yourself is actually going to happen. The same way when you talk about old age, whether we like it or not, we will reach that age that we cannot work or we can work. Of course, there are pensions that are talking about. There are a lot of tier 3, but there are some that will give you immediate cover, like immediate benefits. It has happened after 10 years, after 15 years. I need my money. You have it. You start whatever you want to do with it until the big ones come in. We have also the the family income protection plan. As we sit here, if you look at those in the villages, the food they eat, that today we sit down and we tell them when somebody is eating that food, it comes from the container, this thing. We are here, we are exposed to the pizzas, we are exposed to all kinds of organic food. It becomes a problem for us here. We are exposed to a lot of sickness that may end up curtailing our working life. We have policies that will also handle you on that one in terms of any critical illness, maybe any accident that will result in you not having to work again on that permanent basis. Enterprise Life here is there to sort you out. So in effect, our flagship product actually is the funeral product, because that is where almost every Ghanaian is exposed to. Our number to call immediately is 03026777074. 03026777074. We also have a lot of short codes, that one you can just enter, and then somebody will just come and then talk to you. Talk about that. Thank you very much for the opportunity.
Great. Thank you. Mr. Osman. Thank you very much. So if you just joined us, we are live on Facebook, and we are also here live on our Zoom platform. We are treating on our financial immunity community. Today's session, we are looking at understanding insurance. We just heard not long ago from Access Pensions, and they spoke to us about their insurance-backed pension product. And then the person you just heard before I just got in is our rep from Enterprise Group, the life business. So we are going to go straight into the details of our session for today. And ladies and gentlemen, it's going to be brief and very quick, because this is the first session we are going to be treating under insurance. And we are looking at understanding insurance from just a layman's point of view, and to break it down. Understanding insurance in so that your business to achieving financial immunity will be shorter and easier. Now, there is this fine code that is best fit for life insurance, but it works perfectly for insurance in general. And it says that buying insurance is like fixing a leak in your roof. Buying insurance is like fixing a leak in your roof. The consequence of not doing this is that the longer you wait, the more expensive it gets. And so insurance is one of the critical things anybody who is looking forward to becoming financially immune must not joke with at all. Either it is life or non-life, and you're going to be breaking that down also. But in general, when we talk about insurance, insurance is about safety. Insurance is about security. Insurance is about making provision for a certain coverage for a potential risk that can happen to you. Either it is life or non-life. Insurance is about building a certain confidence for yourself that just in case something happens, you can be compensated in a way, or you can be supported in any way as far as financial losses are concerned. Insurance is about protection, and insurance is about help. And so if any of these words mean anything to your life and your finances, then you've got to take this topic a little bit more serious, because everybody needs some security. Everybody needs some safety. Everybody needs to be confident about his future, that if anything happens to me, whether it is about life or non-life. And Osman mentioned that usually life, you really can't do much about, because everybody's going to die at a certain point in your life. And when you die, what matters? You are gone, but what matters is the people whose life depended on you. Are they going to also have security? Are they also going to be safe? Are they also going to be protected from the difficulty of your exit? When it is non-life, whatever you have been blessed to possess or to acquire, do you have security for it in case the risk exposures that you never thought about kick in and you lose them, or they get destroyed, or something bad happens to them? If these questions are questions that are realistic and matter to you, then that is what insurance is basically about. And it is something that everybody must be thinking about and be preparing towards same, and even to understand for yourself, so that anytime you are taking any decision on insurance, you will know how to take it. And so basically, in general terms, that is what insurance is about, and it's important you understand it. Now, to get into a little bit technical about it, anytime you do an insurance, you are simply risk pooling. You are sharing your risk. You are thinking about say the possibility of a bad thing happening. You are thinking about the possibility of a bad thing happening to your life, or a bad thing happening to something you have or own. And so when it is about life, that is what we call the life assurance or the life insurance. And when it is not about life, but it's about something else, then it's non-life. And that is what we call general insurance. But the point here is that anytime you are thinking about insurance, two things must come to your mind. The first thing is that the possibility or the risk exposure of something bad happening, either it is life or non-life, and then nothing happening at all. Now, if you notice that that possibility exists and it is real to you, then you must think about what happens, because when that bad thing happens to you, it will require some financial commitment to restore yourself, if it's particularly non-life, or to restore other people who depended on your life, if it is life, to still survive. And as long as that thing has a financial consequence, it is insurance that comes in to protect you against that damage, that hurt, or that thing you might have lost. And so that is what basically the insurance and conversation is about. So anytime you say you want to take an insurance, you are getting into an agreement that gives you some assurance that you'll be protected if something is damaged, or you'll be protected if something is stolen, or you'll be protected if you lose something that is dear to you, either it is life or not non-life. And so that agreement is something you should pay attention to, so that you don't get into an agreement you have no understanding of. And many people usually get into insurance the same way they open their door and get into their room. They just open as long as they think they have the key. There is no caution, there is no detailing, there is no research, there is no questioning even of some of the things they would want clarity and understanding on, among other things. And that is not a good habit, because insurance is an agreement, and that agreement is meant to provide you with an assurance of protection, with an assurance of a certain coverage for a future risk. So you anticipate the happening of the risk, and then you take insurance to protect you from the financial consequences that that risk may bring to you when that bad event happens. Again, many people take insurance to mean investment. And so, you know, when you take an investment decision, three things happen to you. Either the investment stays the same, or the investment makes some losses, or the investment makes some good returns. So you notice that anytime you take an investment decision, you are either making gains, making losses, or being in a neutral state where your money is almost the same. But when you slap this understanding of investment on insurance, it doesn't work. Why? Because in insurance, there's nothing like I'm making some gains on what I'm putting there. Insurance is about, is that bad incident going to happen? That understanding is that something possibly can happen that may hurt. Something possibly can happen that may cause me to lose something. Either it is life or non-life. But when that thing happens, that is if it's non-life, or if that thing happens, that is if it is life, then the agreements and the consequential benefits of same now kicks in. So you don't buy insurance and expect that whatever investment promises in the three instances I explained is going to be the same for insurance, not necessarily, so that you don't get disappointed from the word go. So never equate insurance to investment. Insurance is a safeguard against a damage, a hurt, a loss, or either it is life or non-life. But investment is when you are getting into another kind of contractual agreement to be assured of a gain, a loss, or a neutral position. These two things are different. Let me say that there are innovations around in our financial services industry, and some insurance products have embedded in them investment, some pension products have embedded in them insurance, and some investment have embedded in them insurance. So the fact that, say, an insurance product has some investment in it doesn't make it an investment product. The inverse is true. The fact that an investment product has an insurance embedded in it doesn't make it an insurance product. And this is foundational that you appreciate and understand. So essentially, when you purchase insurance on something, it can protect that thing, either it is a life item or it's a non-life. And so if anything happens, or when anything happens, and that item that you insure is covered by the policy, then that is the only time you can say, I'm taking my insurance. So technically, insurance is a contract. It is a contract. Why? Because when you are buying insurance, it is a policy you buy. That is why they call it insurance policy. And when you are buying that policy, the person who is giving you that assurance is what we call the insurer. So that organization, that company that is offering to you that policy, they become the party that is responsible for honoring the contract. And so the policy you buy is from the insurer, and that person agrees to pay you, the person that has taken the insurance product, whatever losses that may be affecting your interest. And so that is something you have to understand. And anytime you buy that policy, you are supposed to pay something that qualifies you to now, in future, if the incident happens, say that I'm entitled to the protection you promised, or whatever support you promise to give me. And so that thing you pay almost every now and then, after you have taken that policy, the price you pay to keep that policy, the price you pay for that insurance you are taking, that price is what we call the premium. And so just so that you appreciate. The next important thing you have to understand about insurance is the different types of insurance, And if you watch this slide carefully, you will notice that I've kept talking about life and non-life. To simplify that for you, in Ghana, we have general and life. So you will hear so and so life assurance, or so and so life, and then you hear so and so insurance. So let me use the example of my partner. When you hear enterprise insurance, it is the general insurance business of the enterprise group. And when you hear enterprise life, it is the life assurance or life insurance business of the enterprise group. So they are two different entities altogether, operating with two different licenses. So when you buy a product, for example, from Enterprise Life, it means it is a life insurance you have bought. And when you buy a product from Enterprise Insurance, that is a general insurance product you have bought. And if you look at the slides carefully, under life insurance, there is term life, there is money back, there is unit link, there is pension. And so whatever, for example, Access Pension just spoke about is going to fall under this. So the kind of insurance they have on their pension product is going to be with the life, a life insurance company. Then when you come to general, you can find motor, you can find health, you can find travel, you can find home, you can find fire, among other things. And in Ghana, the good thing in Ghana is that we have regulation for life and general, and we have regulation for health. So the life and general come under the regulator we call the National Insurance Commission, and then the health insurance come under the regulator we call the National Health Insurance Authority. And so this is something you must appreciate. Anytime you are taking a step to make any of these purchases, remember we have told you in the financial services world that you must always know who is supervising the company you are making a purchase from, either under banking, pensions, insurance, or investment. Today, we are talking about insurance. And so the regulatory body for either life or non-life insurance is the National Insurance Commission. And when it comes to health insurance, it is the National Health Insurance Authority. So again, there's a little bit of expansion on the types of insurance. So before you make an insurance purchase, please spend some time to inquire whether it is life or general. And the critical distinction is that when it is life, you are basically either insuring the life of yourself or maybe a parent or a family member or anything like that, against the day of death, that if any of those things happen, what benefit, what protection, what support do you receive? If it's about general, you are insuring for maybe your car, you are insuring for maybe your home, you are traveling from maybe one country to another, and you have your travel insurance certificate and things like that. You are renting a property with somebody and you are insuring the items in the house so that one day if thieves come in or if there's fire or any of those things, there is some protection and you don't have to destroy everything you have mobilized and saved over the years in order to come back to the same level. That is the essence of insurance, that you receive some protection on the day when that bad incident happens. Many people will say, well, I don't think I need insurance because I don't have much. That is a bad mindset to have, because can you imagine as somebody who is living in a house, listen carefully to this scenario. It is living in a house, he has wire fencing that is electric. He has wild dogs he feeds almost every now and then. He has insured the property itself, and he has insured the items in the room, and even insured his life also. This person has almost everything, and he has the ability to restore himself back anytime there is a bad incident happening to either his life or any of the things I described, and his car and all that. But the gentleman who has barely nothing, he doesn't have anything to survive. He's living in a single room divided into two as chamber and hall, and he has to go and queue every now and then at the public toilet just to ease himself. He doesn't have anything. This gentleman forces and tries to save some money and buys maybe a flat screen. And ladies and gentlemen, can you imagine that this person rather that would find it extremely difficult to survive in case he loses that flat screen or he loses something in that room? That person rather is run away from insurance. So between you who don't have and the one who has, who really needs insurance? It is actually you. Why? Because when you lose, for example, that flat screen, when you lose that furniture, when you lose that little car you have bought for Uber, and you cannot restore it back the same way through support from insurance, and you have to work again and again and again to be able to survive, then you really need insurance. Why? Because it becomes a safeguard for you. And so that is the mindset you must have, just that you must appreciate what it is so that you can understand the term, because you are getting into a contract. And as you are getting into a contract, you should be able to understand what the contract requires. That takes me into basic things you need to understand and appreciate anytime we talk about insurance. We cannot finish everything today, but at least as the introductory part, these are must-knows. If you are interested in taking any insurance decision, you should appreciate any of these terms, and it will help you to ask the right questions and to take the right policy. So when we say an insurance policy, again, the policy is a contract, and you must be interested in what the policy is offering. Don't just sign and move. No, either it is a life insurance product or a general insurance product. It is a policy, and that policy is a contract. That contract details out for you the type of insurance you are taking. It details out for you what that insurance covers. Most importantly, what does it cover and what does it not cover? And it details out for you what we call premiums and deductibles. I'll explain that also for you. Usually you can be bullied by these terms. But first, understand that the moment you sign those dotted lines and paid and moved out, or ask them to deduct from source, you have entered into a contractual agreement with the insurer, which is the organization, and you become the insured party. And so you should be interested in every single detail. Don't just sign when you have not read it. And this is not even for the illiterate. This is for sometimes very high caliber of people who are educated with titles and with a number of degrees. They just sign, they hear whatever the salesperson is saying, and they sign sign and move on. They don't get into the details of what type is it, what does this insurance cover, so that if this happens and this doesn't happen, I'm entitled to A, B, or C. We don't check any of those. We just take the words of the salespeople or whichever group of people we met, and we buy what we buy. And when that bad day happens, and we get to them and they now tell us that, oh, you can only get this, you can't get that, then we are unhappy. Why? Because we just assumed and took their words without double checking what the contract entails. You can't do that when you are doing insurance. Remember, it is not an investment in a term investment. It is a safeguard against a future risk. And so two things will happen. Either the bad event you are insuring against happens, or it doesn't happen at all. Your insurance kicks in when that bad thing happens. And so you must make sure you understand the contract, because you are buying a policy. Now, I spoke about that policy talking about the premiums and the deductibles. And I'm saying that the premium is the money you will pay in exchange for the policy that the insurance company is giving you a guarantee for. That when incident A or B happens, we are going to do E or F. So that is a guarantee that in the event that this thing that we are envisaging happens, we are going to also do that. So what you pay to the insurance company is the exchange for the insurance company to guarantee you what they have to pay you. And so that is your premium. So the moment you stop paying your premium, remember, you are not entitled to what they are guaranteeing you or the cover they are giving you. So your premium becomes the exchanging factor that gives you the assurance the insurance company is giving you. So it's basically the price of the insurance cover you are taking. That is the cost of the insurance cover you are taking. And then when we say deductible is simply the amount of the loss you pay out of your pocket to the insurance company of whatever insurance you have done. In simple terms, anytime you do an insurance and the incident happens and you are making a claim, the insurance company pays you something. And a deductible is a percentage or a certain part of the amount they would ask you to pay as part of the claim you are making. That is the deductible. And so you must always inquire what the deductible is, if there is a deductible at all, on whichever policy you are picking. Because many people will go and make a claim, and at the point of making a claim, the insurance company will say, oh, you just bumped your car and it has damage. We are supposed to maybe pay you 4,000 Ghana cedis or $4,000, but you would have to pay maybe 1,000 or a certain amount of it so that we can pay the outstanding. You can be very annoyed that, look, I didn't do this insurance so that I would come and pay anything. If I had money to pay, I wouldn't do insurance. But you didn't check because it had a deductible in there. And when there is a deductible, particularly for general insurance or non-life, you would have to understand what that deductible is, because usually if it has deductible, it reduces your premium. If it doesn't have deductible, or maybe a very lower deductible, then it increases your premium. So if there is no deductible at all, you are likely, that is if you are not going to pay anything at all when you are making a claim, then it's likely your premium is going to be higher. The inverse is true. And so you can also be in an office and you notice that you did the same insurance, but you are paying a bigger premium than the other. Check if there is a deductible component and understand it that way so that it helps you in your choice of insurance you do. Now, usually, let me say that usually it's important to understand that when the insurance product is non-life, many times you pay annually the premium. But when it is life, many times you pay monthly, because life is something that happens almost every now and then. That is why you buy your fire insurance or travel insurance or motor insurance, and it covers you for a year. You make that payment. But when you take a life product or policy, you notice that there is a deduction almost every now and then. And so it's important to understand. The next thing you have to understand is the coverage limits. And the coverage limit is something you also have to get clearly. And here it is the maximum amount the insurance company can pay when that incident happens. What is the coverage limit? You should ask, so that you know that this is the expectation, that worst scenarios, this is how high we can go. And then it gives you an idea about what it is, so that if that incident happens again, you don't get disappointed. The next thing you have to understand is the insurance policy. And I've already explained that that is a contract, and that contract is something you must understand. And so you don't just sign. If you just sign, you will be hot. If you just sign without checking, you will not be happy. The next thing we have to understand is the insurance claim. Insurance claim is something everybody must understand. Why? Because ultimately, when that bad incident happens, either it is for a life insurance or even a health insurance or even a general insurance, it is going to come to a point where you make a claim. So the claim is like the request you make so that you can assess whatever the insurance promised you in the instance when the case that you insured or the incident, the risk exposures you insured has kicked in. So when a claim is made to an insurance company, the insurer or the person filing the statement must make a written or sometimes a verbal statement to the company. And that includes how the incident occurred and a number of things. Every insurance company have theirs. And so usually many people, they are making a claim and they think that the moment my car got bumped and I got to the insurance company, they know me, I've paid, they know my receipt, they should just go and fix my car for me. No, you have to go through a process and they'll have to authenticate and make sure that you did not do something else outside of the remit or what qualifies you to make a claim on that. And so the claim is a request you make, and that is a very important thing you have to understand so that you know what to do. Now, the crucial part is that when you put together the written claim, it helps them to check eligibility, because it is not the fact that you said I've done life insurance or I have done maybe I've done motor insurance, comprehensive insurance, or a third-party insurance. Let's say a third party as an example under non-insurance, and then I go and hit my car on another person's car. And then because I think I have done insurance, I just come and say they should fix the other person's car and fix mine. Now, when you make a claim, they will check. So they will check. And usually the example of a third party doesn't make it easy for you also to fix yours. It is for the third party. And so that is the claim. The claim helps the organization to determine the eligibility. So you don't have to be annoyed that they are taking you through a number of things. You have to understand it before you do it. It is not like an investment where maybe you did a mutual fund and you went in, you fill in your form. The next moment we say in 3 days come for it, and you go and pick it. Or a bank account where you go to the ATM, you just fix your ATM card, and immediately nobody asks you a question after you've entered your password and code, and you get your money. Not necessarily. What you do is, in insurance, you put together your claim and they use the claim you have filled, the form, to determine eligibility for payment, so that we know that you are rightly within what you are due. Then the insured person, when you submit everything else they want to be able to check what it is required, you submit. Sometimes you submit receipts if it's live, sometimes you submit death certificates and a number of things. Ladies and gentlemen, it's important to appreciate this before you start, so that you don't get beaten up, you don't get angry, you don't get frustrated. You must understand this before you get in, so that when that day happens, you are even prepared for same and you cannot be disoriented in any way. That helps you to be prepared for that. And when you do, one of the advice I'll give is that always be truthful. Many people will sign on to an insurance product and they would not tell the right thing. If it's life, for example, they will not give the right age. He's doing a life insurance for the dad. He will not give the right age because he thinks that maybe he may pay more if there is maybe some a deadly, life-threatening sickness or disease. They will probably not even say. When you don't become truthful with insurance, you are hurting yourself. You are not hurting anyone. You are insuring your car. You bought it for 1,000. You could, I bought it for maybe 10,000. Remember that whatever you do that doesn't show truthfulness or honesty is going to catch up with you somewhere, either at the premium you pay level or even sometimes when you are making a claim. And so be straight about what you are doing and make sure you are saying the right things and you are telling the truth. And then if you do, it helps you to take the right insurance decision. So what must you do in this first part of our understanding of insurance? What must you do so that you can be able to say, I have enough insurance coverage? Number one is that contact the company you currently have insurance with. Many people, for years, you've done an insurance, and every time the only thing you see is a deduction. Papa, you hear a text message and that is all. You've never bothered to check anything. You've never bothered to check the premium. You don't even understand the premium, the claim, the deductibles. You are just hearing for the first time. But thank God you've heard it, you understand it. Get back to whoever you did the insurance with. Begin to appreciate it. Get to read the contract terms, the policy terms that you sign, if they are with you and you've not misplaced it, so that you can understand what it is you have signed for, and you can appreciate what it is you are standing the chance of benefiting from when that incident happens. Is important. And then anytime you are taking that decision, don't just stick to one company. Try and shop around and ask around. I can stick my head out and say Enterprise, Prudential, and all those people are there, but do some research about whichever company. I can say Enterprise is great, but still take some time to check their history. How long have they been there? Which people are behind the organization? How many claims have they paid over the period? Are there some customers who are dissatisfied? What is the history of their track record? Who is their regulator? Is the regulator having an issue with them? Do these checks. Why? Because one day you will be hot if you don't. And don't be bothered, don't be worried. If you have questions, ask them. When you ask them, they will answer. If they can't answer your questions for you, it's a clue that you probably don't have to be with them. And so do that. And when you do that, you'll be taking an insurance decision with the right knowledge, Sometimes some agents would even come, they will say all sorts of things. They will sell it as if they are selling an insurance. Sometimes because it has an insurance component, but it doesn't make it it has an investment component, but it doesn't make it an investment account. That is why you must ask questions, so you don't treat your insurance as an investment. Because if you do, you will be making expectations that will not pass. You will be comparing the insurance product with your investment account, and you'll be disappointed. So, ladies and gentlemen, this is what you must know and understand about insurance. And at least for this first session, we are saying that insurance gives you some security, some protection for that day when, because of a bad risk exposure, a bad incident, a bad occurrence or happening, you have to now go back, steps back, just to support yourself financially. And insurance will be there to help you all the way. Insurance will be there to reduce the burden of financial loss when that happens. Just that we are saying that don't make insurance, don't interpret insurance to be as if it is investment. When you do, you'll not be doing the right thing. And know that it is an agreement, and that agreement has certain things in there you are signing to. And as you are getting into that agreement, you should be interested in what that agreement is asking of you, that what agreement contains, so that you don't get disappointed. And so don't just sign, read. And when you read, you would appreciate some of the things it covers. And then we also said some basic terms you have to appreciate, which is the premium, the cost of the cover you are taking. And then we talked about the types of insurance and some of the things under it. And then we talked about the deductibles and co that you must also understand. We talked about the coverage limits and a number of other things. And we said the claim, what the claim does and how it does what it does. And some of the questions you must ask yourself before you sign under claim, so that you know what it is covering, and even know that claims are not necessarily going to be paid because you made that written notice. They would use it to authenticate. They will use to authenticate the eligibility of that payment they have to make. And so be truthful to yourself and the company. And then we said anytime you are taking an insurance decision, ask questions, very good questions, and get them to give you answers. And then check all the things you have to check. Check with the regulator, check with some clients, and do some shopping around so that you can take the right decision as far as insurance is concerned. Because no two insurance products are ever the same, never. And that is why it's important to do that. After you have been able to do all these things, ladies and gentlemen, on this part one session of understanding insurance, I believe you will be able to become financially immune from danger. You will become financially immune from a future difficulty. And when you build that immunity, you become financially well. When that bad day occurs, when that bad day happens, you will still be safe. And so as we talk about building financial immunity, one of the critical things you have to understand is insurance. My question to you is, have you thought about insurance? If you have not, and your thinking is, oh, it is for people who have money and I don't have, you are joking. Why? Because it is you who don't have who must begin to think about how I protect the little I have, so that when the bad day happens and I'm losing what I have, or I'm even losing life, then I can fall on insurance to support me on the financial requirement of bringing me back to the same level, so that the difficulty of that loss, either for life or general, can be reduced. That burden can be taken care of and you can be fine. That is why you must take insurance serious. That is why you must understand it for yourself. Don't just take the word of the guy who came to sell to you in your office or in your home. Don't just take that word. Take some responsibility and build something for yourself. Thank you very much. We'll open up for questions at this stage, and then I'll come back to you as I round up to introduce you to the Penny app. The Penny app. And the Penny app is one of the tools we are using to help everybody who is ready to build financial immunity to achieve what they have to achieve. Maybe let me get it done here and now. So the Penny app is a financial wellness tool that we have designed, and it's a global app you access. When you access, you go to Play Store now, you type Penny app as it is showing, and then you download the app. When you download the app, you open yourself up to joining a challenge that we are giving ourselves, that as part of achieving our SDG 1, we are driving as many as 2 million young people. And when we say young person, we are talking about between 9 years to about 55, who would want to attain millionaire status in the next decade, that is 2030, so that we can fight extreme poverty on the continent of Africa. So that is the tool we want to use. And so what you have to do is immediately you download the app, you are getting yourself ready to enter into a challenge we call the Count Your Penny Challenge. And that challenge is meant to drive and guide everyone, the child, the parent, the mother, the student, the informal sector worker, everyone, to begin to build financial immunity every 6 months. So we work towards giving you the opportunity on the app to build some regular savings that is equivalent to 6 months of your regular income. And you are monitored, you are policed to make sure you do with any little amount, from any currency, 1 CD to 50 CDs, $1 to $50. It depends on what you want to do. So you go to Play Store on your mobile, and then you download it after you search for the app. When you download, you install it, and then you can click on the app icon, you open it, and then you select sign up. When you sign up, they will give you some details to fill. And when you fill all those details, there are options that you can choose, that I can pay this amount every day, I can save that amount every month, every week. It depends on you. When you do, a consultant monitors you, talks to you, guides you to make sure you are able to achieve that income goal. And thankfully, because we work with financial service partners, they will guide you so that after you raise the money, in 6 months, you don't touch it. It will either be in your mobile money wallet, it will either be in your own bank account, or it will be in a branded money box. So you don't touch it until the challenge is over every 6 months. And when we come and we check and you've raised that amount, then the financial service partner, either the bank, the insurance company, the pension company, or the investment house, would guide you to take an investment or a pension or insurance decision with the amount, so that in the next decade, when we are counting people who are financially independent, you'll be one of them. So this is how you get on board to do your savings on the app after you have entered the challenge. One step is that you always go back to your app. There's a dashboard for you, and you make your daily entries and you save, and it records and it sends a dashboard feedback to your consultant. When you do this and you keep doing it and you keep doing it, you become financially immune. So this is where I bring an end to my presentation, and we'll go into the chat session now to open up for questions and answers. Thank you very much for having me, and God bless you. So now, Julia, over to you, please. Okay.
Okay, thank you very much, Richmond. I couldn't unmute myself. Thank you so much for that wonderful presentation. At least I know that from this presentation, as in looking at the complexity, but he's been able to break it down for us. So those who have, it's been a long time since you visited your insurance provider, please from Monday start making that visit and getting clarifications. So if you have questions, kindly raise your virtual hand, not your physical hand. So the interface is different for the laptop and the phone. So what I'll say is just look for reactions, or those using the laptop, you could just see the hand raised. Those using the phone, look for reactions. You get the hand, raise it up, would allow you to ask your question, or you could also put it in the chat. You could also put it in the chat. We could pick it from there and read it for you. As I saying, for those live, those on Facebook, please, you could just put your questions out there. We'll pick them and answer them for you.
All right, Enoch Ogo is on, so Enoch, go ahead.
Doctor, thank you very much for the clarification. Please, I want to ask if the insurance insurer is around, because Ghana here, when it comes to general insurance, the conversation always locked. So people need a life insurance, it become a burden for them. Are they going to pay when the times lapse? That is the problem, and because of the collapsement of the certain banks, so people think that if I invest to maybe 20 years, would my premium get back to me, or would my compensation get back to me at the time of my retirement?
All right.
That is
all right. Good question. Osman would answer that. Osman, if you are ready, please answer, please.
Okay, so if I got my brother well, he's asking if after 20, when it is time for you to make the payment, the assurance that that payment will be made. Is that what I got?
Yes, that is his question.
Okay, so I think that you made a very important point here when you were making your presentation, that before you sign up, you need to do some background checks on the company that you are going to actually put your trust in. What is their claim history? What have they been doing? What is their profile? I think it's a very important thing for you to check before making it. Enterprise Life consistently for more than 5 years now, we have been the #1 in the industry. Our claims payment is top notch. We have a target to pay our claims within 24 hours. That is our aspiration. For now, 50% of our claims are paid within 24 hours. And so when it comes to life insurance, the important thing here is for us to make sure that utmost good faith principle is adhered to. What you told us you are, you should be that at the end. For example, somebody will say his father is 50 years, and then at the time of claim, it becomes 70 years. That is where sometimes you see that one of us has not been truthful. But when it comes to insurance, as long as the ultimate good faith principle, in other words, as long as we've been truthful to each other, when it comes to payment, you shouldn't have a problem at all. Thank you very much.
Great.
Okay, thank you very much, Mr. Osman. So I'm picking this question from the chat. Please, okay, so please, I want to know that, Sharifa too. Please, I want to know whether tier 3 contributors, are also entitled to the money mentioned by Access Pension.
Okay, so Mimi will answer that. Let's pick some more questions, please.
Okay. I think Technopop 3, this question might be about the Penny app. So please, we'll pick that question. Technopop 3, I'll come back to that question. Let me go to Derry. Are there interest on insurance? If so, what is the expected ratio?
Let's pick the third question, please.
Okay, Bryce says, please, can I insure a used car I bought from someone else? And if I insure my car and I sell it later and probably buy another one, will my insurance be transferred to the new car? Whoa, this is a bunch of questions in one. If I just sell and I don't buy another car, what becomes of my claim?
All right, so I think Osman can speak to them quickly.
Okay, so yes, when you buy a used car, you can insure them. But the issue of transferring that one into another one is another thing altogether, because the risks are completely different. When you buy an insurance and the car has already been insured, you need to go back to an insurer of your choice to begin a new one. You can't transfer that risk, because the issue is not about the car, it's about the driver driving the car. It's also the risk in itself. And so the risk that you bring is different from the risk that another person may be doing the same. And then the use to is also different. The person you bought from may be using it from his office to the house. You will be even going to the villages to see your your family members. And so the risk is quite different. So in a nutshell, risk is not transferable. Yeah, thank you.
All right, Mimi, if you are on, kindly answer yours so we can pick some more questions.
Hello.
Yes, we can hear you.
Okay, so the question was about whether those on the tier 3 with access benefit from the free insurance cover. Yes, if you're on a CEDA pension or CEDA Provident Fund or access pension plan, yes, you benefit from the free insurance cover. So if you have a company and you're looking for a tier 2 provider or someone to handle your tier 3, and you sign on to, you and your employees onto any of our master trust schemes, as a CEDA pension, CEDA Provident Fund, or the Access pension plan, you enjoy this free life insurance cover. Thank you.
All right, thank you.
Okay, thank you very much. So we'll go back as a biggie, Abdul Razak. Can you please unmute yourself and ask your question?
Yeah, Doctor, thank you very much for the presentation. What I just want to clarify is that the lady that addressed first, I just want to get a clear-cut difference between her insurance and, the normal insurance, because it's like she was talking about some compounded interest you'll be getting on the insurance premium you'll be given. So I just want to get a clear difference, please. Thank you.
Okay, Julia, let's pick the second, please.
Okay. Richmond put it in the chat. He's asking, please, where do we make the number of checks you listed during your presentation? So you did mention some number of checks. He's asking, where do we make it? Then also Godwin is asking, okay, what are the exclusion on life policies? Gordon wants to know what are the exclusion on life policies.
Okay, Osman is here.
Okay. So I think I'm picking two questions. Where to check? I think we also have enterprise a group. We also have an app called the Advantage app. When you download that app, you have everything that you want to ask, and then it will be answered. So if you don't remember that, you just download that Advantage app. It's called the Advantage app. When you go, you should get that. When you're talking about the exclusions, general exclusions when you come to life insurance policy has to do with alcoholism. It can, when somebody is extreme, when you talk about somebody is an alcoholic, that extreme level, when you die as of that one, it's a general exclusion. And then in terms of war, so most of the time when you are on a war, your life insurance it doesn't cover you when you are in war. And then there's a general pandemic, so to speak. However, Currently, enterprise life has softened grounds on most of these things. But during this pandemic, we lifted up most of that exclusion, and we have paid all those who have died as a result of the pandemic. We have even gone ahead to even give us some free premiums to our frontliners, the doctors and the nurses. Within that period, all the premium that they were refunded. So when it comes to general exclusions, on paper, you see that when it comes to war, death as a result of some radioactivity, etc., they are also all there. But most of the time, we do soften our grants when it comes to that. At the general business level, that is where the exclusions is held. It's a bit stringent there. But when it comes to life insurance, you know, there are some policies that before you take, I did mention the family income protection plan. You will need to tell the insurer will ask you some questions based on your health. And so at the time that you are taking the policy, you need to give full disclosure with regard to your health. By the time of claim, the insurance will now have to test the information that you give and then look at it vis-a-vis the information that is coming out at the time point of claim, then to understand whether you deliberately conceal some information. Some information come out when even the client himself is not aware. For example, if I am HIV, for example, and I'm going to take a policy, and when an insurer asks me of an HIV status, I'll tell him no because I've not gone for any test, I've not shown any symptoms, so I don't have HIV. But then on test, if I die as a result of HIV, and even turns out that I had HIV even before I took the policy, the question the insurer will always want to know is at what level was he made aware? Did the doctor make him aware? The important is that when were you aware you had that particular ailment? That is where we want to test whether you have concealed some information on. So that is the literature.
Okay.
I think that was a great response. There's Gambo here. Gambo wants to ask a question.
Hi, Richmond. Hello?
Mimi, kindly go ahead.
Hello.
Okay, so I think there was a question about I was saying something about compound interest and the mix up with insurance. So basically what we do, Access is a private trustee. So what we do is pensions, and with pensions is an investment. However, I mentioned that to support our clients, we have a free death benefit or medical incapacitation cover of up to 5,000 flat, 5,000 Ghana cedi. So it is not an insurance product, it's just an add-on or an added benefit. It's a pension product. Thank you.
Okay. Thank you very much, Mimi. Richmond, there are some questions that we've jammed. Richmond Hassan is asking where we make the number of checks you listed during the presentation.
Right. So I think Osman mentioned that for their end at Enterprise, you go to the app and you can check all those. Now, if you just want to do a general check for the industry bits, you can visit the National Insurance Commission's website and you call them about any of the things you want to do. You can even Google list of insurance, life or general companies in Ghana licensed and in good standing, and their names will come up, and you visit their website, you pick a call, you do your own checks, or you ask the regulator about each of them and they will let you know. And there is always a leak. You can find out which one is the biggest, which one is having the best claim payment history and things like that. So you do that on the National Insurance Commission website if you are in Ghana. If you are not in Ghana, there is a regulatory body you can pick the detail of your insurance company from, so you know whether they are in good standing or otherwise. Thank you.
Okay, Bright still wants to know. He's asking what he means by the transfer is that if I insure my car and I sell the insured car to buy another car, can I transfer my old insurance on the car I sold to the new car I bought?
I think Osman will have to answer.
Okay, so hello.
You can't hear you.
Okay, so again, it depends on the company. If I buy a car today and I insure it comprehensively, maybe 3 months later I sell off the car and I buy a new car and want to insure it with the same company, and then maybe there are some 6 or 7 months I would want to transfer that money. There are insurance, some insurance companies would allow that. Enterprise insurance like this would allow that depending on how the policy is. So it has to be policy specific. Some will not allow that, some will certainly allow, especially when it is comprehensive.
All right, that is very straight to the point. That's very good.
Yes. Okay, so Sunday is asking, what happens to my policy and premium if I have to file a claim?
Okay, so once again, it has to do with which type of claim you want to do. Again, too, it's also policy specific. If you come to the life insurance policy, if I take a funeral policy, for example, and I cover my mother, if my mother dies and a claim is paid, technically premium being paid on my mother curtails. However, on the funeral policy, again, it comes to it's policy specific. There is an option for that premium to be converted into a more of a savings component on the same policy called the extra cash bonus. So that same premium continues, but then that particular bit that should have been premium on the death of my mother is now accruing some little interest for me. After a year, 2 or 3, I can come and withdraw that. However, if the client is not interested in that, he makes it official, and then that premium based on that life is taken off, and the rest who are alive is still there. Again, once again, it still has to do with policies. If I take a funeral policy and I cover my mother, father, maybe sister, family members, and the policyholder dies and leave them. When it comes to enterprise life, the premium that the policyholder is expected to have been paying, enterprise life will now take over the paying of those premiums, and they will pay those premiums until every life on the policy passes away and the claim is paid on them. That is when the policyholder passes on before the other covered lives. We will not go to the trustee or the beneficiary and say bring premiums. No, it is the company that will pay those premiums for them. We waive all those premiums, and every claim that is, every life that passes on that, will pay it to the nominated beneficiary. So, like I said, it is policy.
Just before you drop, somebody's asking about the value of inflation on the money covered if the claim happens to be in 30 years or more.
So fantastic. Once again, when you take a life insurance, there's an option that you take that is called the inflation protector. So if I cover my mother and I say, if my mother dies, I will need about 5,000 cedis benefit, or let's say 50,000 cedi benefit. The client is allowed to opt for an inflation protector. It could be 5%, 10, up to 30%. What it means is that every anniversary year, your premium will go up by a certain percentage, and your benefit also goes up with, by that corresponding benefit. So you could take a policy which is 50 years first year, by 10 or 11 years, you will be taking about 500,000, depending on the inflation protector that you have chosen for yourself. That is an option for the client based on affordability. It could be 5%, it could be 10%. If somewhere along the line you can't continue, you can reduce the inflation protector, and then once everything comes okay to you, come back and then restore.
Right. Julia, over to you, please.
Okay, Richmond, there are quite a number of questions. Can we just take two more?
Please, let's do. Our time is up. Move on and let's answer them quickly.
Okay, so I'm just going to bunch up these questions. Sharifati is asking, can you throw more lights on insurance, the motor insurance? Okay, so I'm going to share them, one for each person, pensions and insurance. Can you throw more lights on the motor insurance? Then Richmond is asking, please, with tier 2, can I move from one trustee to another? So please, we'll begin with Mimi.
Okay, so Mimi, they're asking about porting. And then the question,
Hi, can I have the question again, please?
he's asking if they can be porting. They can be port. Can I port from one trustee to another?
Yeah, definitely. You can port from one trustee to another. If you need any assistance, you can contact the number I give, and we'll help you with the process to be able to do that.
Thank you. Julia, the question about light on general insurance, I mean, it's too broad to say, can you throw more light?
That on motor.
I mean, do
On
you
motor
say
accident.
what exactly on motor does she want to know?
On motor insurance.
It would be unfair.
That's all that she said. Sharifa too.
Maybe Osman can say something about that.
So if I got Sharifa well, two things here, and maybe answer from both angles so that is she saying that the number of people who are going to drive the car, can you insure their how many lives or what? First of all, let's get this straight here. You will have to tell, the insurer will ask you how many people will be driving the car. Is it you alone? Is it you and your spouse? Is it you and your spouse and other brothers? It is important for us to know that the more people who get access to the car, the higher the risk. And for that matter, the insurer will have to be very careful. So that is one bit. Is she also asking us to those in the car, how many more lives will be insured? I think that, again, for every vehicle, there is the legal a number of people that one has to take. As long as those people are within the list, and everybody should be insured, especially when it is comprehensive. Thank you.
Very good answers. Thank you. Julia.
Okay, thank you very much, Mimi and Mr. Osman. Thank you so much. So we will draw the curtain here, but would encourage you to go and subscribe to our YouTube channel and also like the Facebook page. We've put those links on the WhatsApp page. So please do that so that we could pick your questions and answer, throw more light on them, because we would need to end here. And just to round up with some questions on the Penny app. Some have been asking if you will be able to get your money back. Yes, the Count Your Pennies challenge is for a 6-month period. So after the duration, you could get your money. But if you're able to hit your targets before then too, we could guide you as to the next thing you would want to do with your money. So you don't need to wait for the challenge to end. So far as you're able to meet your target before, you could get your money to do whatever reason you came into the challenge for. So we would end here. As we said, please, you can put your questions on the WhatsApp. I'll get the answers for you and get them back to you. So thank you all for making time to be here. We really do appreciate you. Thanks to our partners, Enterprise and Axis, for also coming on board to answer all our questions for us. And thank you so much to all the FLF volunteers who make who made this program possible. Really appreciate you. And finally, thank you to Dr. Richmond Kwame from Ponda as Executive Director for also always being available to speak to these critical financial topics that we need now more than ever. We thank you all. So on the Count Your Pennies challenge, we'll throw more lights on them on the page. But if you need further details, please pick this number 0544 200 500. I've put it in the chat. So you could just pick that number and call anytime, and we'll be able to answer further questions on them. Thank you all.
Thank you.